Is now starting. All attendees are in listen-only mode.
Welcome everyone. Before we begin, I just want to make sure that you all can see my screen and hear me. Anybody there? And if so, kindly type yes. Thank you. All right, perfect. Let's go ahead and start, guys. Welcome everyone to our next weekly Stockwaves webinar. We're going to do a little treat today by taking a look at gold miners and gold and silver as well. Kind of a little teaser for the miner service, which again, if you guys don't already know, you get a discount for being a Stockwaves member if you have not already signed up for the miner service. And just want to show you guys what we're seeing in that space with the recent price movement and what we can expect going forward and the opportunities that are showing themselves in this space. So let's take a look to start with at the gold chart here. So we continue to fill out what looks like an impulse off of the low that we struck at the end of last year. On the gold chart, that low was made in August. So I still think that the price action fits best with the most recent high that we've seen in this move off of the May low, fitting within that impulse as the fifth wave. So we're slightly exceeding the larger 618 extension currently, which is fine given the bigger fibs. I actually was looking for the wave 3 of 3 here under the bullish blue count to hit the 1382, so stretching to or close to the 764 extension, which is up at 1429, is not really much of an issue. But there's a number of reasons based on both this chart, based on the individual miners, and a few other charts to still consider, again, that this is the fifth wave up of the wave one that began back here in August, and we will still get another pullback or consolidation in wave two. The alternative, though, that you can see here shown in red is that we do have 5 up into the February high as the wave one already complete. At that same minor degree, the pullback into the May low was the wave two. And if that's the case, then I would view this as the wave one of the larger third still. So, and in that case, just now at a 618 extension as well, based on those fibs. Relatively common target for wave one of 3. Near term, though, it does look like we could still see a little bit further upside in this move. The price structure that we have off of the low that was hit earlier this month on the 11th does support what looks like an ending diagonal structure, though. The initial move here was 3 waves. So far, we do have 3 waves in the more recent move from the 17th. So that can be your 1, 2, and then the high that was hit either last night or possibly we make a marginally higher high here, maybe just up to 1397. Can complete the third of that diagonal, fade back down to the lower end of the trend channel in a fourth, and then that final fifth can take us up to complete the ending diagonal fifth wave of the larger fifth within our wave one. So again, looking for a local top to form soon after a little bit more near-term upside and give us either that minor degree wave 2 pullback or at the very least a wave 2 of 3 consolidation.
Which could still be back towards the 1330 region, which might be a 4% fade from any new recent highs that are hit in the low 1400s. And, you know, our concern is just that if people are going in too quickly with near-term leverage, that any even shallow consolidation that lasts, you know, a week or two and is very constructive for more bullish extension, you know, can very easily derail an over-leveraged position that doesn't have enough time on it.
Right. And the next up, let's take a look at the silver chart. Now, this chart does count a little bit differently, simply because up to this point it has been much weaker. It's been underperforming gold on a relative basis over the past several months. The move up that we got from, in this case, a November low, it actually made a lower low compared to the August low that gold held. The move up from that November low into the February high does work as a 5-wave structure, and obviously the decline that we got into the more recent May low was much too deep to be any sort of fourth. It came all the way down to a 786 retrace and allows for a possible 1-2, similar, a little bit more similar to the red potential here on gold. But in the same vein, this looks like a wave 1 of 3 off of that recent May low, also potentially counted as a diagonal. So kind of similar to the diagonal in gold, this can be completing a third soon. I'm allowing for another micro fourth and fifth here within wave C of 3, and then another 4-5, ideally, to finish off that circle wave 1 of 3, another consolidation, and then we can really start a more sustained breakout in the wave 3 of 3. So again, a little bit different than the potential on gold. I view the count on gold a little bit more reliable compared to the one on silver, but basically treating each chart on its own merits, and we'll continue to kind of track those counts based on what price is doing on each individual chart. So let's see how that fits in with the GDX chart. We have pretty much the same potentials here as well. Either price is finishing off the fifth wave of a larger leading diagonal in this case, from the September low, leading diagonal because of the three-wave subwave structures and the overlap that we have within the price structure. But this would be the fifth wave of that leading diagonal, which again can also stretch a little bit higher near term, even potentially kind of up into the 26 or 27 region before we put in the next stop, and then we get a consolidation as this wave 2. And it doesn't necessarily have to be a super deep pullback as the wave 2. It could be a 382 retrace, or maybe even more of a sideways consolidation. But there is the potential, again, that we do get a pullback rather than an immediate and sustained breakout. The alternative, the same 1-2 with the wave 2 already complete at the May low, is shown here in red, but there's good reason to believe that that would be the 1-2 of a larger leading diagonal. Not just because of the questionable subwave structure on the GDX chart, which, you know, definitely there's an issue, in my opinion, counting this as 5 waves up. Really counts better as a 3-wave move. But when Zach and I have looked through the various different individual miners, the ones that make up the GDX and a lot of the other miners that are included in other indexes as well, the charts that do support that same 1-2 have pretty clear 3-wave structures in that wave 1 and really fit that larger leading diagonal potential much, much better than any sort of standard impulse. So if this is the 1-2 of a larger leading diagonal, then a typical target's going to be the 100 to 1236 extension for your third. And this would currently be the A wave within that third.
Which the current projection, for the A wave that Garrett's showing in red is the same as is a 1 degree smaller C wave than what he shows the ABC in blue. So it's targeting the same region. It should still get a small 4-5 up towards the 26-27 region. And then instead of pulling back in that larger blue parentheses wave 2, it might only fade back towards the 23 region as the B wave of that red larger third.
Right. So near term, the paths are pretty similar, as Zach was saying, whether the blue or the red count. It does look like, similar to gold and silver, we can see a little bit further upside, another fourth and fifth here. Even possible we get a little bit higher in this third, maybe to 25, 55, then fade in the fourth, and then get the fifth up to 26, 27, before completing either the blue wave C of 5 or the red A wave within the larger wave 3 of the red leading diagonal potential. So, both of those, again, would suggest a pullback or at least a decent-sized consolidation, either in this red B wave, which on the red count for the gold and silver chart would coincide with wave 2 of 3, or the larger pullback as the blue wave 2, which would coincide with that same blue wave 2 on the gold chart. So again, we think we can see a little bit further upside in all of these charts, all three of these charts, but not looking, at least personally, until we see more evidence from both price on these charts and the individual miners, is this being the heart of a third wave within a standard impulse structure.
Right. What is very encouraging is that, you know, when sentiment seemed to be very much, you know, in the depression phase of the sentiment cycle back in May, as we had, you know, people thought that February was a breakout, and Garrett and I were looking for a consolidation, and we got that consolidation as what's now a little bit ambiguous, and whether it's the fourth or the wave 2. But as we pointed out, you know, in near the end of May, it really didn't matter at that point whether it was a 4 or a wave 2, because the projections for the fifth or the A wave of the third were almost the same, targeting that 25 to 27 region. And we had a very clear ABC corrective consolidation off of the February highs that was proportional. It looked good on technicals. It had all the nice subwaves inside it, as far as a 3-wave move and then a 5-wave move for the C wave. So it was a very, very high probability low. We added a few names in our mining model portfolio, and we're expecting a nice rally. And we're also expecting a shift in sentiment for things to very quickly change to people being more bullish and thinking that things were more than early on in the pattern. But the nice thing, I think, is that in any of the counts, it does strongly continue to confirm that the 2018 lows were a more significant bottom as the end of primary wave 2.
And just from a traditional technical analysis perspective as well, I mean, we have some significant overhead resistance here with the prior highs that were hit back in 2017 at around the 26 level, just underneath 26. So reason to believe that wouldn't be taken out on the first attempt. So you want us to take a look at TXGM, correct?
Yeah, and we've spoken about this a little bit before in other presentations that Garrett and I have done. But TXGM is a mining index that's listed on the Canadian exchange. It does have some base metal miners in it, but it includes more. It includes about 70 different names, and it's not quite equal weighted, but it's a little bit more, a little bit less heavily weighted in favor of those 10 or 12 biggest market cap miners that make up the GDX and even a good chunk of the GDXJ. So, you know, you're getting a little bit bigger of a spectrum of the entire sector. And, you know, with any index, there's going to be some ambiguity, because you have, you know, we say each chart on its own, and the benefit of the mining stock service that Garrett and I think, similar to stock waves, is that instead of only looking at an index, which might not have the most clarity at times, you know, you can look at different groupings of charts and seeing individual names and see much more clearly distinct patterns that are telling, you know, one group might be telling one story, another group might be telling another story. So if you're looking for things to trade for immediate breakout, then maybe you have a list of a couple of names that look like a stronger 1-2-1-2-1-2 setup and is an impulse for an immediate breakout. But the ones that are clearly looking more like a fifth wave of a leading diagonal, or that A wave of the third of the larger diagonal, can give you an opportunity to maybe trim and rotate some of those holdings in a more diversified portfolio.
And interesting to note that we actually have not made a higher high here yet compared to GDX, which obviously well exceeded the high that we saw in April.
Right.
Here, though, I mean, obviously held a much higher level of consolidation in comparison to GDX in the primary wave 2, even got an expanded flat where the B wave made a higher high in relation to the top of the wave 1. So the high that we hit in April was almost at a 382 extension, so it's very possible that that was the wave 1 of 3, and this is wave 2 of 3, and it's ready to break out in wave 3 of 3. But as Zach was mentioning, when we take a closer look at a lot of the individual names, you know, there's a lot that would still argue that this potentially could be just a deep fourth and a fifth, and either maybe just making it up to the 50% or just pausing for a slightly higher high and consolidating again, and then taking off in the primary wave 3. So we're obviously very bullish going forward over the next several months and years, looking for a substantial amount of further upside in miners. And that's kind of how we're treating the model portfolio in the miner service. Obviously much more longer term oriented with those trades, but just kind of attempting a little bit to tamper expectations and make sure that people aren't getting head over heels on a sustained breakout, and at least recognizing the potential that we can see further consolidation before continuing higher.
Do you want to pull up GDXJ real quick just to talk about the deeper relative wave 2 and then the stronger move up?
Right, so this one definitely argues much better for the 1-2 start to that larger leading diagonal. Yes, technically we can still count the same fourth wave as the blue count on GDX, and this is wave 5, the smaller leading diagonal, but much deeper pullback here, and much more expanding trend lines for that potential. So the alt 1-2 is definitely a higher probability on this chart, but the expectations are pretty much the same as what I was describing for the red count on GDX.
Right.
Basically, this would be the... Sorry, go ahead.
Oh, I was just going to... Similar to how the degree that it got a much deeper retrace from February into the May low, I think in the same red count, that even though this leans was one of the ones that I was looking at as saying, hinting a little bit more to the red 1-2 count of the larger diagonal, is that from the 36, 37 region as the possible top of that red A wave of the third, instead of the blue 5 of 1, that the fade that it can get can come all the way back to the 32 or 31 region in a deeper fade relative to the same B of 3 that GDX might get.
And here you have a similar near-term expectation for at least one more fourth and fifth. Maybe even this is just the top of a 3 of 3. So 2 sets of fourth and fifth waves before that A wave or the blue fifth completes. And then a couple of individual miners.
Yeah, let's look at like Barrick,
one
of the big ones. Oh yeah, we can look at copper first.
So copper obviously has been a little bit more depressed recently compared to gold, GDX, and other precious metals, but it's still holding on to the potential for this alt 1-2. But right now we do have only 3 waves up from this June low, and ultimately I personally want to see price back above the 200-day moving average, as well as the 50-day, which they're kind of in the same spot right now, but back above the 2.78 region to really put a lot more faith behind that alt 1-2 holding and seeing a more immediate breakout, because here the potential to continue down in that blue sea wave is still very much on the table. Now, it could be for just a double bottom. The 2 prior lows came just shy of the 50%. Could just get a 5th wave of the C down here, then turn back up. But we still don't have enough proof, especially compared to the GDX gold and silver chart, of a bottom and the start to the next move higher here. So let's take a look at gold. Kind of similar to how this move forced the smaller AB and then now the C wave of the A wave within the leading diagonal potential on GDX. The same is true here. This should be now the C wave of that circle A. So this chart is one that aligns very well with that red larger leading diagonal potential that we were discussing on GDX, with room for more near-term upside, at least a micro 4th and 5th wave to complete this parenthesis C, and that would finish off the circle A wave, and then another consolidation in the circle B wave before heading up in circle wave C, ideally to this 1236 extension target at 1889. So this one again works very well with the red leading diagonal count on GDX. And then which ones other charts did you want to look at?
Let's do RGold, RGLD.
Here we have a more impulsive standard impulse count developing. It's actually possible, because the majority of other charts count this way, to just view this as the primary wave 1 high and the primary wave 2 high, but doesn't really affect near-term expectations too dramatically. Basically, the move up from the November low here works very well as a wave 1, either at minor degree or potentially at the intermediate degree, depending on, again, where you put that primary wave 1. But this seems more like a standard impulse count developing to the upside. But that would still suggest that price can see a, throw some fibs on here real quick, a wave 2 of C consolidation.
Right. And that's one of the reasons why I suggested we look at this one, because it's probably one of the strongest setups that's clearly an impulse within an impulse within an impulse, and starting the heart of that 3 of the intermediate 3 of the primary wave 3, which is even inside on Royal Gold, is even inside a cycle wave 3 that started at the 2016 lows. But even here, off of the May low, it looks like 5 waves up that is completing into the target region that we would expect for a smaller, minute degree. That's the circle Roman numeral lowercase 1 I for wave 1 of that larger minor degree third that's targeting all the way up into the 140 region, possibly even stretching to 160. But in the near term, it can still fade back down towards the 90 level. You want to look at FCX, and then maybe we'll tease everybody with one of the small names that we see serious outpacing potential on.
So FCX, when we turned back down from the high that was hit in April, it seemed, based on the structure that we were getting off that high, that price was likely going to make a lower low and at least test that 302 retrace, which came pretty close to doing at 934. So that was at least the minimum expectation for this 5th wave down. And that's the alt wave 5 there in red. But kind of like I showed on the copper chart, still not 100% sold on a bottom in place here, although I'm certainly open to it, especially if we can hold a corrective consolidation on the next pullback and then take out whatever high we strike here, as well as the high that we struck back in April. But until then, you at least have to continue to consider another C wave back down, which, similar to copper, doesn't have to be all the way down to this 50%, but at least retesting or making a lower low compared to the low that was hit back in May.
So my primary on this one is your alt 5, and so I have the same alt for the slightly lower low in primary wave 2, but on the smaller degree, I do think that this can be 5 waves up off of the 920s, and so if it can hold in the 10s, like 10 and a quarter, ideally, or maybe even 1040 as a small wave 2, then we can head up into the teens and maybe even the 20 region again as part of a larger wave 1 in the start of that primary wave 3. What do you want to do, CDE or HNY or AGI?
Let's do AGI. AGI, you could pretty much apply those same 2 potentials as the GDX chart. We can count it as either 5th wave up, completing for the larger wave 1, now approaching a 50% extension, relatively common target, even possible it extends up to the 618 or closer to the 618. But not out of the question that where this 3-4 is where 1-2 was, and this is now wave 1 of 3. So you have the same possibilities that you have on the GDX chart and the gold chart as well. Still expecting at least a consolidation of wave 2 of 3, and even potentially a more sizable pullback as this blue wave 2.
It's actually even one of the more muted ones. You want to pull up CDE, and then we'll go on to some of the requests.
So there were a few charts that made lower lows into the more recent bottom compared to the ones that were struck at the end of last year, and CDE was one of the ones that we had continually pointed to in our reminder service that had not provided enough evidence of a bottom in place and was bouncing in a 3-wave move that looked proportional as a wave 4. So we got that further extension down as a 5th into the 764, and so far getting a nice reaction off of that target support, which certainly opens the door to that bottom in place a lot more confident than we previously had in the move up from the prior November 2018 low. So what we're looking for here is a higher degree 5 up. This can be a 1-2 and now 1/3. So if we can fill out kind of a similar 4th and 5th wave that I was showing you on the smaller time frames here on gold and on silver as well, take this a 4th and a 5th, then we can place a lot more confidence in the bottom struck and look to add to positions on the subsequent pullback.
And there's a lot of really bad looking charts in the minor section. There are a lot of very tiny companies that have a lot of holes and are so thinly traded and so cheap that it's hard to notice any kind of good wave pattern. When we have a name like CDE that has a more than 900% move for the primary wave 1 off of 2016, and in a very clear 5 waves up, it has very clear wave structure for the ABC down into fib support. Our fib projections, if we're looking for a degree move similar to that primary wave 1 that is 138.2% at a minimum, that puts this as looking for targets up in the 1600% type return region, which is pretty incredible.
Even a measured move C wave, is pretty respectable.
Right. So this is one that we definitely will be looking to add positioning to when we can confirm that 5 up and 3 down. And I think that could even be based on where your yellow fibs are, Garrett, that you just drew. 5 up towards the 2.236 region in the 480s might be just wave 1 of an even larger wave 1.
Right.
So could be a very, very nice trading vehicle in conjunction with other mining positions. All right.